Good morning, everybody. Happy Tuesday. Welcome back. Welcome back to some risk off trading. Futures market looking for a pretty sizable gap to the downside. We will have a look at everything. It's going to be an interesting day, certainly uh, week as well. It really just kind of revealed the market's underbelly and how non-supportive it was. We knew that 6,900 was important, 6,890. Those were the lows last week. As soon as we saw some geopolitical friction and tension, look out below. I posted this morning in Telegram. So just based on the structure, if this is a rising wedge, there is not much stopping this market from dropping. Now, that doesn't mean that we can't have a bounce in some way, shape, or form. Rising wedges also play some games where it might be down, up for a retest and a fail, and then roll over, right? Or it obviously can just be look out below and we just fall aggressively until we find some structure lows to maybe offer some support. So volatility is up. We are seeing the VIX over 20. All right. First thing I might do this morning with the VIX at 20. I don't know if I want to jump right in and sell some premium, although it would be appealing. I'm curious if I can get some decent fills on like a SPY or Q puts or ratio spread going out to, I wouldn't mind going out to maybe June, July. I wouldn't mind going out to like November, December. But I would be playing the April lows of 2025. So I do want to take a look at that this morning for Project Options Edge. For daily profit play, we'll take the day in stride. We'll probably expect some higher volatility. Again, we have a recent high at 20.71, so we're already looking at some pretty aggressive swings today. 20.71, possibly like a 1.3% correction. Now the market's already going to be down about 1.4 to 1.5% at the open. So we're going to have a huge gap lower. We will have, let's see, this level here, SPX 5-minute. You can see here the gamma profile is all to the downside. We close at 69.40. Is it possible that we open and hit 68.50, 6800 today? It's very possible. That is a 2% sell-off from Friday's close. 2% sell-off. We're already there. 1.5, 1.56 futures continues to climb and mount. VIX is elevated. I don't think this is a time to be brave. I think this is a time to, stick to defined risk, trade smaller. I would consider, selling some premium at the VIX at 20. That's never a terrible play in my opinion. I also recognize that the volatility index might also, if we're breaking this kind of low volatility regime, we might easily spike back into the mid to high 20s again. If this is Liberation Day 2.0 type stuff, don't discount the VIX going to 30, 40 plus. So on that note, we do have some VIX longs that we took for crash insurance, and we will see what they look like. Coming into today, VIX up at 20 plus. Let's see if this actually offers us some profit. It's a synthetic long. This is best served for a trade. If I look at analysis here, this is best served for a VIX into the mid 20s or just a big fat spike into the 30s or 40s. I don't know how profitable it's going to be. I just know that we have unlimited profit potential to the upside and we have defined risk to the downside. So my max risk on this VIX is like $350, $360 max risk. Should be about $360 max risk. Profit potential, VIX has another big spike into the 30s or 40s. We'll probably take some profit. That should be worth a couple $1,000. If you have something timed where you're long VIX, it is a naturally reverting instrument. So I don't try to, I don't know. It's hard. It's hard to trade the VIX. If we're going to see a spike to 40 or 50, I'm probably taking profit when it's at 30-ish, or trailing in some way, shape, or form. So we'll see. But at least I feel a little bit better that we have some VIX longs and some VIX long exposure. Okay, let me get the chat up for everybody. Screen share is running. Yes. Okay. Chat. Let's go here. The Hoosiers. Yep. It's amazing what a blank check can do for a college football program, huh? All right. What's happening? Hey, Roy. Catherine, good morning. Good afternoon for you in Germany. Let's see here. Andy, good morning. -11 in Wisconsin. Yuck. No, thank you. Still have open. Yep, I do too. Yep. So the 130 monthly expiration trades that we did for engineered options are still pending, still going. Can you provide a webinar for Project Options? Larry, we don't have a webinar on it. It's never been like sold as far as like public. What I do have in Project Options Edge is you just contact the team, support at pressbirdie.pub.com, or contact the team. So Project Options Edge, this is kind of a request and you can get it. I don't have any webinars on it. This has been a purely discretionary service that I've offered as a bonus to my Diamond Club members. Or now that it's offered as a standalone, it's you talk to the team and they can get you connected. Okay. So that would be support at pressbirdie.pub.com, or give our team a call for Project Options Edge. All right. Morning, California. IU football. Should we cancel it? Nope. I'm going to keep. Look, the engineered option trades. Here's the deal. We're already down from last week's starting position. All right. So what I have potentially running today is if I have, let me go to XSP here for a moment. This guy. So if from last week I have trade number 1, okay, if I can get filled on a defense trade and the market goes back up, I can lose here, win here, and still make money for the week because my expiration is today. Obviously, if the market is going to open and fall lower and I get filled, I'm taking on that risk. But if we have any type of intraday bounce, that defense trade might come in handy for today. So I'm keeping the trades open from last week with the 120 expirations, and I'm looking to see if defense can help me out to get me out of a loss for the week. Yep. So we'll see. We'll see if that 685 can get filled for defense. JC, no, I'm probably not gonna. I'm not gonna force a trade for defense on SPX. I'll keep the monthly trades running on SPX, and I'll keep the new weekly trades running on XSP with some caution. So I'm not going to defend that 69.35, 69.30 trade. It's like you're calling a lucky level. If you're going to get filled today, it's like, I don't know. It's probably not the best trade. The alignments look really bad. I mentioned that this morning in engineered options. I mean, look, I'm being fully transparent. You're trading with complete, you're trading with complete acknowledgement that the alignments are not conducive for a bullish week. Okay. That being said, based on trade size and typical kind of extended conditions, the market might quickly flush this out, and this might put in a near-term bottom. The market could do all sorts of stuff. We don't control that. Okay. So I'm still going to participate this week, even though I'm doing it with caution, trading with caution and small trade size, which I am. Okay. And same thing here. It's 1 hour bearish, 4 hour bearish, daily sitting at the 50 period. This could easily continue to fall, which means we go bearish, bearish, bearish. We should just stay out. But right now, if we see that the market's at the 50 and it's breaking that structure, but the market wants to come back to retest, we could still get a winner this week. So it is all about, trade size and managing risk. I'm not looking to take big trades. Okay. I think my max risk here would be $300. That's my maximum risk for the entire week. So I can certainly stomach that. And if I'm dead wrong, that's my risk. If I carve out a win, I'll probably make 50 to $100. Okay. So not trying to be a hero. I think that the better trade is more duration, at least for, higher probability. So more duration. If we have the VIX at 20, I might take a little sell stab at some SPY and some Qs, sell, meaning I'm going to sell some premium, but I'm going all the way down to April lows. So I'm going to see what I can get for something way down here. Okay. Because the odds of the market falling that far, I would say, are pretty slim. Right. If we're going to see that this is just a cleanse and the market needs to get this rising wedge over with, well, there's technical support for a bounce, or here is previous all-time highs with the decent trend line support. So between 6,500, 6,150 or so, I'm looking for the market to give us at least some odds of a bounce. just I'm just throwing a warning out there. It's like we seem to make 20% corrections, kind of our thing. And I'm just throwing it out there like 20% is not going to feel good. Okay. If we're down 20%, this market's at 5,500. Don't be scared. It's still a buying opportunity, but it's going to feel like garbage. Um, so we will kind of navigate it. But, this little pullback's around 6%. This pullback's around 10 to 11%. We'll see what the bull market's made of. 20% is very realistic. We've had seven of them. If we have an eighth time in 10 years, wild and crazy times, but this market still could have a, dip buying opportunity. So, like I said, I cannot stress this enough. Do not trade to be a hero. Do not trade large right now. Everything we're going to do in daily profit play, stick to the plan, trade small. Waterfall income, we might get filled finally on some of those pullback trades we've been waiting for pending orders. Hopefully, this volatility can kind of get us rocked into that like 10 to 15% buffer. If we get filled, great. We'll keep an eye on those for today. We will have class today at 11:30 on waterfall income. Okay. Let's see here. I put it down here. One Trade Mastery. That's another foundational course. So foundation education there. If anybody wants access to this, if you're in engineered options or you're a lifetime member of my other services, you have the practical options full course. It now has its own classroom, or it's inside your engineered options. If you'd like a bonus course, you came in last week. I think you just said one trade in the chat, and I shared this link. Also, my man Stacy shared this link a bunch. So if you'd like this foundational course, it's a 70-minute video, and it's just kind of teaching you like you want to trade the market bullish or bearish. Here's one simple way to do it, and it's just using a debit spread or credit spread. I compare long calls, debit spreads, credit spreads, return on risk, where prices are at, where the break evens are at, just good stuff for like very basic strategies. But if I can get you, comfortable with foundation, then jumping into any of my services and trade alerts, there's a lot smoother learning curve when it comes to like, wait, I've never seen that strategy before. I thought I was just buying calls and buying puts. You'll notice it's probably the thing I never do. I don't just buy calls. I don't just buy puts. It's my least favorite trade because I feel like you have to aggressively manage those positions. And I'd rather just create a line in the sand, get some asymmetry, accept the, max upside, accept the max, defined risk, and just take lots of base hit trades. So that's more my style. Sure. The link expired. It shouldn't expire. It's just a play link. Let me see if I can find it here. All right. So here's a video walkthrough on One Trade Mastery. It should just be a play link. It shouldn't expire. It's a public video. So it's going to be a big, long Vimeo link, but here it is. Copy and One Trade Mastery. There's the link. Advances will let engineered option trades go to expiration today. Yes, they're going to expiration, man. If we get a defense trade that fills and we carve out a winner for defense, but we lose on the participation trade, we still make money for the week. So, I mean, how does that happen? If we get filled, so if XSP opens at like if we get filled at like the 685, 684, I will show you those pending orders here. So let's go XSP here. Where's my 20th expirations? Here we go. So the 685 and 4, 677, 678, 677. These two trades would be my defense trades. Okay, so 85, 84. Let me get this one up here. I need to add a second contract. Replace 685, 684. Okay. And then the 78.77. Okay. So I'm going to keep the defense trades just as look, it's a bit of a Hail Mary to see if the defense trades filled and gets us out of trouble with the market down like 1.5%. I could also just be, throwing money at it. But we're a bit on the shock side of. I mean, look at what happened last Monday, by the way, right? Last Monday when the market opened, it immediately, rallied to the upside. That could just be like a very quick squeeze to the upside, but that's enough to get us, some maybe win on the defensive side, which will net us profit for the week. So despite, things being really, really choppy last week, really compressed, what we're seeing is that the market's compression is leading to it's not going higher. We never hit 7,000 and we've rolled over kind of breaking some key support. That 68.91 you can see on my chart here, that was key support. It is now breaking below that. So all I'm saying is this, be prepared for this pattern to give back some gains, right? We are now open and vulnerable to probably a 6 to 7% correction. If not, maybe the volatility and the drama could spread to like a 10+% correction. That's not a bad thing. Okay. It's going to feel bad. It's going to be annoying, but it's actually a good thing. Okay. As somebody that wants to buy this market, as somebody that wants to be positioning for a discount, I never love watching the VIX spike up and it's like, oh my God, here we go. Trade war 2.0. It's not. Okay. More than likely, everything that's happening right now between the US and European Union will still bring talks, right? I mean, Trump has already showed us it's like he's notorious for making headlines, being noisy, and then walking things back. So I don't think we're going to play tough with allies. And if European Union has united front, like we're going to back down a little bit. I have no idea. This whole thing of like the sale of Greenland. Are you freaking kidding me? But it's noise. So when the market's trying to price in uncertainty, that's what this was. Markets don't know, they get a little scared. Markets don't know, we're going to be moving lower, right? So, and the good thing about this instrument, this is SPX 500. This is like the 24-hour instrument. So the futures market, it looks like this already. So that's what's happening. We're already at the 50-day moving average. We're breaking this rising wedge structure. There is room to fall. Now, that being said, doesn't mean we just automatically drop down. It's like I've seen rising wedges do this many times. They break the structure, they come back and retest. They test the highs, so they go slightly higher, and then they give up with a topping pattern, and there's a cap. It's like we could have some head spinning volatility here in the next couple of weeks. I just want you to be prepared. Like this is not the time to play hero. Trade small. Let's figure it out. Let's survive, and we'll see what the market gives us as far as better opportunities. Okay. All right. I don't see the link. You can't see the history in the chat. All right. One Trade Mastery. I'll post it again. One Trade Mastery. There you go. Okay. I want to do some rough calculations. VIX at 23.5, as in 20.35. We have recent highs at 20.7. Okay. 20.7. So 1.29%. I will recenter this. So this is going to be a terrible day, by the way. Like we're closed at 69.40. So I'll center this at 69.40. We're going to have a huge gap to the downside. This it's possibly already going to stretch and hit the VIX box based on that centered price. So this VIX box is already, oh yeah, we're going to be way below that. Okay. So the easy thing is if we're opening way down here, we just do some fresh calculations. But if the VIX is going to go up more today, we want to be pretty cautious. So we'll see, man. This is going to be a wild day. One thing that might be really interesting as far as daily profit play is not taking excessive risk, but rather maybe looking at like the expected move and trying to get like 250 out of a $5 spread. Like make it a 1-to-1 today or kind of tighten it up, or just play kind of the defensive levels and see if we get filled at those calculated levels. I don't know. Standard daily, I mean, it stays like this where it's like market makers still do their job, and when they're kind of caught on their heels, they typically do a better job. But we are, I don't know, we're opening up some pretty wild doors of volatility right now. Okay. Yep. Let's look at that market maker move, by the way. Good point. Let's go SPX. So pre-market, I'm showing a plus minus 35. We're going to be way higher than that. Volatility index is up to 20 plus. It's going to be way higher than that. So I've got pre-market plus 35.54. 35.54. That's pre-market. VIX is already at 20.71. 20.71. That is a 1.29% move. And we'll obviously keep an eye on the VIX this morning. Okay, we got a few minutes for opening bell. All right, so people asking, what about gold, silver? I mean, they're still up. I said that in Telegram this morning. Look, they're still flowing. I mean, right now it's like the friction in the geopolitical side. Gold, even though I look, I know we're going to pull back to this 200-day moving average. It's going to happen, but one of the easiest trades right now is to be long gold and silver. Okay, so enjoy the run. Now, I don't know if this goes like bubbly blow off top to like 5,000 plus. It's not my job to call the top. I'm not selling gold. Okay. All I'm looking for is technically we are due for a pullback because we are on one of the longest runs time wise that we have had in a long time. I think the last run we had was like 2009 to 2011. This last time we touched the bar at 200, the 200-day moving average was all the way back here. It's now 580 bars. Okay. Look, a lot can happen getting to 600 bars. We could have bars 582 to 600 look just like this. And we just keep going straight up, and it's like it's going to correct. Okay. But that doesn't mean we have more. That doesn't mean we have immediate dropping, and I'm certainly not going to sell gold. Right. So I have trades in GLD. I have trades in SLV. I have trades in PHYS. And I have trades in CEF. Those are the four instruments that I'm trading for my exposure right now. So I'm long, I'm long, I'm long, I'm long. Am I protected at any of these positions? No. Why? Because these are long-term plays to me. I think these all have a place where what I want to do is I'm not heavy in these positions after taking like a 3-year profit. Okay. This high, I was taking profit. I participated on the dip. Same thing on silver. So I'm back in wanting to add more to them, but I refuse to add at these highs. So I'm enjoying the runs while we're getting them. But if we get pullbacks, I'll be adding more to them. And when I say pullbacks, I'm talking like legit 20 to 40% corrections. I don't think we have like this, a little 5% pullback. I think just expect, the type of ridiculous like vertical look to the charts could be the same type of movement in reverse. Okay. So I don't want to get stuck like chasing tops when I have some exposure already. We can enjoy that run. But I do think that technically speaking, we'll have some pullbacks to buy some more. Okay. The one thing that keeps the gold and silver trade running, silver is being led also by the AI build out. It's kind of price insensitive just because it's such a race to get more silver. It's driving prices up. There's a commodity scarcity that's driving these prices up, and the charts look nuts. Okay. But with gold is kind of the perfect reflection of geopolitical tensions, global yields rising, and probably the certainty that governments are going to try to print money. And it's like that playbook is now so open and transparent that it just seems like the world is now like, yep, let's just buy gold. So it's like a move away from fiat, and it's into gold, and it's just getting all sorts of traction. It doesn't mean that it's going to be flawless. It's going to have volatility ahead, but to me, gold in the portfolio in the bigger picture is a great trade. Silver in the portfolio, it's probably going to be more volatile, but it's still a great trade, right? Ratio wise, gold and silver, it continues to push a little bit lower. Our historical average is between 40 and 50. So we're getting into that historical average, which means that gold could be a better timed performance at this stage. Okay. Doesn't mean that I want to like dump my silver exposure. It just means, at this point, gold tends to outperform once we're in this kind of historical average level. And it's just, this is crazy. This is crazy how fast it got there. But it kind of takes away when they say poor man's gold, it's like it takes away the price advantage of silver's underpriced. Now it's not. It's pretty much fairly priced according to the historical averages and ratios. Okay. Do you ever look at Fibonacci levels? Yes, all the time. Yep. So, I mean, what I told a lot of traders to do late last year is grab the low from the April levels, or if you, I mean, I don't know what instrument you're looking at. If you're talking about gold or silver, I mean, gold or silver, I've been dragging this Fibonacci higher, higher, higher until we start seeing a correction. I mean, I'm taking this literally from the lows in 2022. You can do wave structure and all that crap. There's no wave structure here. I mean, you don't look at wave structure and say 1, 2, 3, 4, 5, 6, 7. It's like that's not a wave structure, right? There's nothing here that gives me that typical like 1, 2, 3, 4, 5, and then a correction. It's not there. So to me, this is all one big follow through on a larger time frame. And if we go from a low to whenever this forms a top, I'll be looking at pullback levels into here. I still want to be buying levels. I just want to be mindful, like we could have some serious corrections, like double-digit corrections. Okay, here you go, Calvin. There's a link. Hey, Blake, will you do me a favor? Can you copy that link? And if anybody asks for it, can you share it? Okay, so gold, silver, still good plays. Bitcoin retreating from, I think we had highs at 90, 98. It's retreated back to 90. Risk off trading is obviously taking a toll on Bitcoin. It's not breaking fresh lows. We'll see what happens. Okay, markets are open. Okay, I do have some trades getting filled. XSP, let's have a look. Okay, it looks like we're getting some monthly trades getting filled. That's not a bad thing. All right, we'll make some sense of that here in just a moment. SPX gapping lower. Let's find our levels. Let me get some real-time gamma. Keep an eye on the VIX for this morning. Okay. This isn't a great look, by the way. Market from Friday's close to today's open and flush lower, all led by futures, all led by the holiday. That's one kind of ugly thing about the weekend is the market closed on Monday, but we still had futures running in the background, and we also saw a lot of geopolitical macro news that was just like, yep, this is going to be bad. So all that support that was holding at 6,900 has all been given up. Now, from a 0 day, you notice that there's very little to kind of save this market right now. The day isn't done, but from a market maker perspective, everyone's caught on their heels. So this either works one of two ways. Either this is in a negative gamma environment, this is the retail crowd is aggressively buying puts, okay? And they're buying puts, which means the dealer flows will be net short puts, which means they have to sell the underlying in order to cover themselves. So that is a negative feedback loop where it's like this thing will just potentially go lower. Okay. Now I'm seeing support here at 68. If this market stabilizes and works its way up, okay, great. But we are at, I mean, today is kind of like an outlier type day. We're already at like 150+% ATR. Don't try to be a hero. Okay. Now I do think that we can kind of safely calculate some levels here. Get one more thing. Safely calculate some levels. We are getting a massive gap lower. The VIX is at 19.6. We've got recent highs at 20.7. I am going to move this chart alarm on the VIX. I'm going to see if we can get some premium for today. if we open with a 20.7, that's that 1.29% move. Okay. Market, by the way, is already down like 1.5%. So market's down. We opened around 1.39 lower. Gosh, such a okay. Defense trade filled for engineered options. So engineered options. Update 120. XSP 120 expiration defense trade. The sell 685 put. Buy 684 put. All right. Stay tuned for more updates. So let's see here. I would like to take a look at the option chain, SPX for the 20th. I'm going to plus minus 45. I'm going to go pretty low delta here. Nine delta. Wow. So if we go 10 delta, it's not a bad trade. Can we get a little bit more follow through? I'm going to try to get a buck on this trade. Okay. Pending order coming for daily profit play. Okay. Pending order there. Yeah, Stephanie, they're pending orders. Let me see if any are getting filled. So XSP. Okay. So this is a defense trade. So between the two, we'll see if I can carve out. This one might lose. This one might win. We'll see if we can carve out a slight winner on the day. So that would actually be a great win for engineered options if we can carve out a net profit despite the market being down, 1.5%. Okay. I have some monthly trades getting filled. This one is a monthly. Okay. Keep an eye on this. All right, we'll circle back. So 685 is my line in the sand. I know that I need price to be back above 685 by the end of the day. If that's the case, then I can carve out a win for defense, and I'll take a loss from last week. But based on my trade sizes, I can still net profit. We'll see how this plays out. Okay, it's in the chat. It's in Telegram for members. All right, daily profit play. There's a pending order for a buck. It's the 69.10, 67.60, 5 wide. Okay, so a little bit more volatility. One thing I want to take a quick peek at right now, VIX is 19 and change. I don't know. Let's see if there's enough volatility to sell some premium on the SPY. Let's see if we have some follow through. What I want to do is calculate out my kind of high and low. Let's take the open price, go 1.29, 67.55. That's based on a 20.71 VIX. Okay. Um, Let me see on daily profit play. Can I get 67.55? Okay, so my put side is already there. I'm gonna go broken wing butterfly. Hmm. So I'm not overlapping, but I'll see if I can get $1 on that trade. Daily profit play is showing 85 cents. I'm asking for $1. What would that movement be? We opened at 64. I'm 50 points higher on a plus minus 42. Okay. We'll see. It's gonna let it marinate for $1. Seeing some people with Thinkorswim getting some Thinkorswim charts are stuck. I don't know, man. That I mean, that happened during. That's like I'm not saying this is like Liberation Day, but that did happen for a lot of traders during Liberation Day. There was some ugly price fills. Brokers were down. Brokers were closing up shop for the day. It was a very difficult day to get execution. That can totally happen. So just stay patient. Again, you don't have to force trades today. Okay, we'll see what happens. I'm going to set that chart alarm at the VIX. Hopefully, the VIX is not going to rip higher than 20 and change. If it does, then I'll have to adjust that bottom broken wing. Hopefully, we're not going too much lower than 68. Based on what I see right now, there's not much in the way of gamma, but 6,800 seems very gettable. Okay, this could be just a straight up ugly day. We could go down to 68, then bounce our way back. I don't know. It's it's a it's a bit of a toss up type day. Okay, so I'll see if we get filled for daily profit play. I'm asking for $1. Then I've got a broken wing defense, and I'm asking for $1. This one is subject to change in case the volatility index jumps above 20.71. Okay, let me see for the. I don't have any 126 trades yet filled. So right, so my engineered options trades, my 126 expirations are not filled yet. You got to be close. The 686, 685, that's trading for about 45 cents. It's going back and forth. I'm going to keep an eye on it. They're all pending. Okay, they're all pending. All right, we'll keep an eye on those 130s as well. I don't know if I had. Let me check the 130s. I don't think I had any of the monthlies that we talked about last week. Not yet. Jan 30th. That's waterfall. Yeah, the 130 expiration ones haven't filled yet. Okay, give me a second here. So engineered options. Quick update. I have 120 expiration XSP for 2 trades. One is our participation level. 2 is a defense level. Okay. 126 expiration trades. No fill yet. 130 expiration trades. No fill yet. Okay. So we do have some pending orders. They're not filled yet. Just let those marinate in the platform. All right. Daily profit play. What are you doing? One thing we could look at, and this is definitely a riskier play for today because we finally have some higher VIX all of a sudden. If I were to do the expected move here, like this would be the call side. If I did 68, 90, 95, and let's go, oh 05, and like right now that's offering 215. If this trade fills for like 250, I'm gonna see if I can get this thing for this is a different trade, but I'm gonna try it. I'm gonna go 250, see if we can get, we're kind of right back where we started for the day. Actually, you know what we should do? What was our kind of high plus or minus in the morning? I saw like 44 to 45. So we opened around 65. So 68, 65. That's our opening price. Plus or minus 45. You saw 51, 45 on Tasty, 51 says Thinker. Is that a Nestor? Are you talking Thinkorswim? 51. Um, we can split the difference and say 50. So let's go 50. So it'd be a 69.15. Gosh, I mean, it's a tough trade. I'm gonna look for, we opened around 65. I'll try based on like this. I mean, this is where we gotta believe in some market efficiency. Um, is it possible that right around here, this is kind of like the center of the day within like five or 10 points? If I can get filled for $2 on this trade, or I'm sorry, 250 on this trade, I'm risking one to make one. I need to see if price will stay inside the market maker move, which in red is on my platform. So this is the market maker move right here. That's not the color that I wanted. This is the market maker move. So if we can stay inside this for the day, if I can get filled for 250 and it can stay inside here, like that's a nice profit. Um, it's definitely some risk, but it's not big risk. It'd be 1-to-1. Let's see. It's offering 205 right now. I'm going to be stubborn and say, if it gives me 250, I'll take the trade. If it doesn't, I'm not going to take the trade. So I'm going to try for 250. Let's move. I mean, there's so much skew in the market. Like I can go so much lower on the put side right now, but I'm just going to play to the expected move. Gosh, this market might drop to like 6,800, by the way. All right, I'm going to try that 6,800. And let me look at some gamma. I don't have any gamma to the upside. That's at 45. Okay. I will try this. This is a gutsy play, but 250 credit. This is for daily profit play. I don't think this is going to fill. We're going to have some direction for this thing to get filled, but it'd be a 1-to-1. I'll keep an eye on it. Okay. So I'm going to have 2 pending orders for ever daily profit play. New trade. 1-to-1 setup. Okay. So it's in the Telegram for members, daily profit play. So one trade open a little bit wider and out of the money for $1, and then go into the expected move asking for a 1-to-1 250 credit. And if price is just a big fat nothing burger today where nothing happens, then guess what? No fill and no fill. And markets just go, oh, well, all the drama was kind of priced in right at the open and nothing happened, which is trading. Like that can happen for the day. My hope, of course, is that the market wants to come back and carve out a little bit of a higher level. That would get us our XSP trade for engineered options, where we take a win on the defense trade. Even though I lost last week from the entry, we'd still net profit on the week. So I need that to be above 685, and we'll see if that defense trade wins. Nice, Larry. 69, 10, 67, 75, 10 wide, buck 75. Good, good. Okay, got it. All right, so 2 pending orders on SPX. I'll see if those fill. Just let them hang out. Give me 1 second here. All right. By the way, for engineered options, I do have the Thinkorswim link ready. I'm just getting that package for delivery, so I'll do a quick video on that. I have the workspace and the grid available. I got the download link for you, so I'm just getting that posted in your classroom for engineered options VIP members. Post link in the class. I'll complete the video tutorial. Yep. Okay. Let's see. Jack says, I'm not in this daily trade. Engineered options on XSP remaining as first posted. Yes. Yep. So, Jack, what we have running, if you saw for engineered options Telegram, engineered options Telegram, I just posted a quick update, 9:43 a.m. Eastern time. I'm in a participation level trade and I'm in one defense level trade. Let's see how the net trade settles. So those are the 120 expirations. I have 2 trades. Last week's trade that was filled on Wednesday, and then this morning's trade was the defense level. If price stays above 685, I'm going to lose last week when I got filled on Wednesday, but I'll win today's defense trade and I'll net profit. I'll be down 50 bucks, up 100 bucks. I'm positive on the week. So hopefully that is going to be the net result. That'd be lovely, actually. Okay. So like I said, I'll keep everyone posted on like the net results. I still have trades pending for the 26th. That's next Monday. I have trades pending for the 30th. That's the end of the month. Those have still not been filled yet. I'll keep an eye on those. Okay. Let's see here. Actually, bet it in the area. Yep. Yep. Sorry, Buck. I posted those in Telegram. I just need to add them to the. Thank you for reminding me. I'll put them in the tracker. Yep. So they've been posted in Telegram. I'll get them in. So that's going to be trade number 23, 4, and 5. 23, 24, 25. So I'm putting in a 1/20th. And these are pending still. Okay. Six and five. Okay. Pending orders are in the tracker. Trades number 23, 4, and 5. You get down. All right. So tracker's updated. Telegram's been updated. I'll keep everyone posted on our trades. Jaron, the three SPX today, you make them day. I mean, it doesn't matter if there's zero DTE. You can go good till canceled. They're still going to expire today with a 0 day expiration. Okay. All right. Look, there's just a lot of moving and shaking this morning. We got a big gap to the downside. Does the market just immediately contain it? Maybe. I mean, VIX hasn't done anything. So unless the VIX starts to get some flows later in the day, unless we start to get some ounce of direction today, look, do not say that the market's like, oh, that's all we're going to do today. There's probably just lots of stuff going on behind the scenes, market makers, flows, deals, hedging. I mean, this market finding a way to either fight back or give in to the negative gamma. I mean, the day is not done. We've been in this for 26 minutes. So just, I mean, if anything, you can sit back, relax, be a spectator. Like I said, all morning, trade small is probably the best thing. Not forcing trades, certainly a smart thing to do. But we will keep an eye on this structure. Okay. Here we are. So the daily chart has come down to the 50-day moving average. Is it going to bounce from there or is it going to break? If we break below it, there's room to fall to 100, like we did back here in November. We hit the 100-day and we bounced, right? But we've hit the 50-day several times where we had a long stretch away, finally hit it in a single day, bounced off of it, hit it again, bounced off of it, broke through the 50 and the 100, bounced off of it, hit the 50-day, bounced off of it, right? So does it offer support? We'll find out. If it does, I think the support is short-lived, to be honest. I think the market's, still capable of, like, once we broke this indecision here near the top and didn't get to 7,000, I think the market's kind of showing like that support structure is at risk. Okay. This is, in my opinion, this is a good thing to offer us better opportunity for, longer term positioning. Okay. Larissa says, what indicator to use for gamma levels in TradingView? It is it's a service that I'm an affiliate for called Tanuki Trade. They have a live gamma price action here. So, I mean, right now we have 6,800 is a pretty large gamma in real time. And then my dynamic trend, same thing here. So I wouldn't be surprised to see 6,800 getting hit today. Right now we seem to be pretty sticky right around 6,850. Let me check yeah, this is 0 DT. So what I'm showing on the live profile is 6850 and 6800 would be the potential magnets for price today. Okay, you notice how it's all red? That just shows how quickly things turn. Okay, that doesn't mean like let's take bearish direction. It doesn't mean that at all. It just means right now you have retail crowds buying puts, which makes dealers net short puts. But in order to offset that, they have to sell the asset. So they're selling while retail traders are buying puts. That's like that negative feedback loop. Now, that being said, what often happens is retailers, they jump on, especially when it comes to puts, they jump on at a pretty terrible price, right? What's the VIX doing? VIX rips up to 20 plus. Everyone sees this. They jump in and load up on puts. And what does the market do? Maybe this. Maybe the VIX spikes up. We get rid of all the low VIX here. We just have that little cleanse, and then the VIX just settles right back in. Okay. Remember, we do have a Wednesday because tomorrow is a VIX expiration, so we have a 121 VIX expiration. After the 21st, this kind of peak in the VIX could be reset. Okay. Or you're going to see more additional hedge flows. And it's like once there's tons of hedge flows, it's like, well, we'll see what the put call ratio does. It's like the market toys with those type of dumps. When you get like crazy aggressive on long puts, the market's like, we're just going to screw you over. So we'll see. But for right now, we have kind of a boring intraday price action. Opened up at 65, trading at 45. Okay, we'll see what the day does. If it's going to give some of it back, it's like there's just waiting and catching his breath. It's like, does it drop? I mean, we're already at roughly a 150% ATR. Okay, so 50, 100, 150, 200 is going to be down here towards that 6,800 handle. That in a single day is a large sell-off day. Okay, if you were trading with me last year when we had that October 10th single day sell-off, that November 20th single day sell-off, those were massive percentage moves. We had Jackson Hole with FOMC. That was an upside risk of like 180% ATR on the day. Those are unusual days. Okay, so we'll see. Can we sell credit on the VIX calls above 20? So are you saying you want to sell the VIX at 20? I'd rather sell the VIX at 40 or 50 if it's offered. If you went out like 30 to 60 days on the VIX, I mean, 20 is like, it's always a questionable spot. Does the VIX automatically retreat at 20? All it takes is, 20. It kind of look, all this market does, there's an entire regime of volatility suppression. When the VIX spikes to 20, all that vol suppression stops. So 20 is a very delicate spot because it could easily jump to 30 or it could get squashed right back down to the lows. Now, the higher probability is it probably gets squashed back down to the lows, but in the event that it flares up, you want to have, some defined risk if you're going to sell vol. My favorite time to sell vol would be if it's at 30 plus. 30 plus, you go out 60 days, it's probably down. If it's at 30 to 40, you sell vol 30 to 60 days, it's probably down. So 20 it's right on the cusp. Like we could have just another nudge and 20 goes to 28, 29, 30, or it gets retreated. I'm not that interested in selling VIX at 20. I'd rather sell it at 30, 40. I think that's a much higher probability trade. Okay. Let me take a quick peek at the VIX trades for this morning. We're still down on the VIX. That's so annoying. We'll see. If we get a volatility event and it goes to 30, 40, we'll get a couple $1,000 out of that. Let's see here. Brian, mobile and desktop, I'm unable to get engineered options. All he gets is a trading toolbox. Brian, you in your classroom? What are you looking for? Are you in one-click trading? I mean, if you have Telegram, that should be all you need to kind of get the updates that have been posted this morning for engineered options. Yeah, check Telegram, man. It's in your tracker. It's in Telegram. All the stuff's in your classroom. One-click trading. Yep. Okay. You don't see a volatility crush after I mean, sure. But I mean, I don't want to discount what's going on between the European Union and the US. It's like I do see a vol crush with VIX expiration, but I also see that once we've gotten through the January 16th, like remember what happens on January 16th? That's the monthly expiration. All the leaps, right? All the leaps from last year expired last week. So if you bought a January 20, like if you did a leap in January 2025, let me type this out. So if you did Jan 2025 leap, which is a long-term call, and that expired January 2026, that would have been your 116 expiration. Those trades are done, right? So anything good that came out of this, profit has been reached and realized. The expirations are in. So right now it's like now people are going to be looking at, are they taking new leaps? Well, they would have been buying those last week, going out to January 2027. Okay. So with that kind of long-term trade out there, that would have been like the uptick in order flows, which is probably why we got to 69.86, and then we got to 69.60. But we just have that softer vulnerability like on that rising wedge formation. So could I see a VIX retreat? Yes, of course. But this week with, I mean, geopolitical stuff, it's like we're very vulnerable. I'm just saying, like, we're very vulnerable to have the market give us a decent, 3 to 5% correction. We talk about that rising wedge structure pulling back maybe 6 to 7%. Any increase in volatility, I think 10% is a very doable correction. Okay. But just look at the current markets. Everything is red. Okay. You want to take a VIX play. It's like, how long are you going out? Right? How long are you going out? If you're going out like 90 days, I'd take the trade. I mean, even if we have some immediate volatility in the VIX, it's like, give it 30 to 45 to 60 days. It's probably retreating. And it'll probably be under 20. We don't see the VIX elevated at 20 plus unless we're in a bear market. Even in 2022, when the market was bearish for 10 months, the VIX spent most of its time between about 20 and 40, 20 and 40, 20 and 35, like the entire year. So anyway, I'm just not getting aggressive on anything. Now, one thing I want to take a look at really quickly, since the VIX is at 19, is it enough to say, should I sell some SPY puts? Maybe. Okay, I still think there's more downside. I think the market's going to have a 5 or 10% correction, this year. So I don't want to just throw in a naked put, but I will say I'd like to take a look at it, the VIX at 20. If I went to either end of the year, December 31st, or January 15th on the SPY, I know that the 480 was the low from last year. Okay, I could do a 500, 490. Like, this isn't a terrible trade to me. So I get $7 for the trade. My ownership price, if I want to take any shares of the SPY, my ownership price would be at 480 minus 7. Let's do the math on that. 480. I got to have some capital in this one, but 490 assignment minus 10 minus 7. I'd own the shares of the SPY at 472. Okay, 472 on the SPY would be a pullback all the way back down to below the April lows of last year. That would be 472 break even, puts me down about 32%. Would I be willing to own the SPY at 32% off? My answer to that is yes. My question is, if I go here, or here, or here, or here, or even here, I can get a $500 profit, which I do like this trade. I'm going to put this in a margin account. This is going to be a good one for Project Options Edge. I have a buffer now of $35. So if I were to take assignment, 490 minus 35 minus 5, I'd own the SPY at 450, 449.85. From all-time highs at 450, now I have a 35% discount on the SPY. I'm going to take this trade for Project Options Edge. It does take some capital. We just had a class on this. This is a ratio spread. We just had a class on this yesterday for Project Options Edge. Now I could go obviously a little bit tighter to this one and pull in 700 bucks, but I don't mind getting 500 bucks and taking a big fat profit trap of $35. So let me see if I can get filled here for 520. Okay, let's see if I can get filled in this one. This is going to be for a margin account trade only. I'll try to get filled at 5, just under the mid price. 518 is not filling. Let's try 515. Filled at 515. All right, trades coming in. 515 filled. Next. Okay, I'm getting these filled on my margin accounts. 519 got filled. Okay. Couple more, and I'll post this in the chat. Okay, so those are filled. I got filled anywhere between 515 and 519 for credit. All right, so it's coming in Telegram for Project Options Edge. I'll post it in the tracker as well. New trade. Small flare up in VIX. Near 20. Taking a ratio spread on SPY. So that's a 525 with a 490. This setup provides a $35 profit trap, and I'm willing to own the SPY if less than 490 by expiration. Right now, that 490 has about a 91% chance of profit. So 91% probability of profit. And again, the reason that's lower is because we have a VIX at 19 right now. 91% probability of profit. We have about a 10% assignment risk. The 490 sell put filled at $8 credit. If not, wanting to own shares. Manage the naked put side for, I would go $8. So $8 is the fill. I would say 24 debit or 32 debit for a managed loss. So you could cut that down to, instead of having like full naked put exposure and risk, $8 to $24, that'd be a $1,600 loss. That's manageable. The VIX would have to flare up even further, or obviously price would have to fall to below 490, which is pretty unlikely. So let me build this one out really quickly. So we'll go option strat, build, going December 30, what is it? December 31st on SPY. Going all the way down here to the 525. So I'm buying the 525 and I'm selling the 490. That's the trade. So yes, there's risk. Okay, but where's risk at? Price has to drop below. I mean, $450 is my risk. Anything below 450, yes, I'm taking on some heat. But that is a 34% discount from current all-time highs. Okay. Rick, not a surprise. Rick says the Supreme Court will not issue tariff decision today. Go figure. All right, so the Supreme Court is 0 for 3. I stopped caring about this, last week when I dropped an F word saying like just make up your mind already. It's just so much noise. I didn't even pay attention to it. I know it was supposed to come out today. Nothing happened. So all right, this is the ratio spread. So right now we're trading at 682 ish. Right, we have 30+% wiggle room. Plus we have a profit trap. But look, by the end of the year, where's price going to be? If we're flat or higher, then we've got full profit here for over $500. If we're down, we could be down as much as 30% for the year and still get paid on this trade. So, I do like the trade. So I'm willing to own the shares. And, if I could take a chunk of shares at a 35% discount, I'll happily own the SPY. Because from a 30+% discount, if I add more at a 40 to 50% discount, we're talking about major ugly correction, long-term gains, sit on it. We get back to all-time highs in 5 years or 10 years. You've doubled your money. I'm okay with that too. Okay. All right. So that's what the trade looks like. This is going to be posted in Telegram. And let me post it in Project Options Edge for the tracker. Okay. So just selling some premium there. Brian says, I'm unable to get engineered options through one-click trading and get no Telegram. Okay, Brian, dude, you need to contact support then, man. I mean, if you're a member, you're in the classroom, you got to have access to one-click trading, at least to get Telegram. I mean, once you have access to Telegram, the classroom is there for your master classes and education, your recordings, your notes and stuff we've taken for the last 3 master classes. But give our team a call. I mean, if you can't get into one-click trading, give our team a call, help them get you squared away. Or let them help you get squared away. Support at Prosperity Pub or call them directly, 904-706-3537. Just get on the phone with them, give yourself 10, 15 minutes, and have them walk you through, what am I missing? Why am I not getting access to one-click trading? I want to get the Telegram updated for engineered options. Okay. All right. Let's see here. Mindy, do we get the NVO $56 put? NVO. I have I've got an NVO trade running. I did one for Project Options Edge. So I think I did a ratio spread in this one. NVO right here. So I have a 50 by 45. Right now, max profit's 117. It's already up, 81% of that max credit. So I'm doing okay in NVO. Okay, what do we have here? Peter, admin are supposed to have SCOTUS contingency measures ready to roll. Benefit adverse tariff judgments. Knee-jerk song remains the same or no. I agree. Look, man, I think it's going to be I mean, look, what was 2025? Noise. What's 2026? Noise. I think it's noise. I mean, if I go back to this chart here, look at, you can zoom out as far as you want on this chart. I had an interesting saying that I heard this weekend. Pessimists sound smarter than optimists, but optimists live in bigger houses. Okay. Everything you're starting to see out there racking up on YouTube and racking up on socials is how this market's going to roll over and fall so hard. Look, The US cannot afford to have this market be permanently down. If it falls 10, 15, 20%, it's a short term, like it's a short term ugly, scare the pants off everyone, but it is going to be resolved most likely. If it is not resolved, we have much bigger problems. Okay. So be prepared for volatility flare ups. Be prepared for noise. Be prepared for drama. Be prepared for everything to look terrible. Okay. It is still a buying opportunity. And you're talking to somebody that is always cautiously bullish. Cautiously bullish. All right. But I do believe that you have, right now, you have a scenario where the Fed is fairly accommodative. They're not doing heavy amounts of quantitative easing, but they're doing enough to kind of continue to kind of fan the flames of government liquidity or market liquidity. You have a government that is doing anything in its power to juice this market higher, even if it is at the cost of borrowing from the future to pump these prices up today. Right? Look, keeping a very neutral opinion on a political situation, I do think that Trump is the type of president that if he can leave his post in 2027, 2028 and say, look, the stock market is at all-time highs. Look what I did, right? It's not look what the country did. Look what we did together. It's going to be, look what I did. If he gets everything running to all-time highs, this crazy, the market cannot be stopped. It's going to be silly how much upside we have. It can all come crashing down after he leaves. He doesn't have to take responsibility for that. He doesn't take any accountability for the market being led to a bubble, right? Or pigs being led to slaughter. I think he's the type of president that would love to say that his legacy is all-time highs. We did this, we did this, we did this, or I did this, I did this, I did this. And whatever happens afterwards when he's not in power, not his problem. Not his economy when he leaves. So whatever does happen, it's noise. The whole market, I'd say the US and the entire global market cannot really afford to see these markets crumble. So any type of volatility that we see, I get it. But you look on this chart, okay, to me, even going back to the lows of COVID, can it get really scary? Yeah, we've got much bigger problems. If this market breaks below 5,500, we've got much bigger problems, right? And I talked about this a lot last year with that systemic risk. I said, if we break below those April lows, we've got problems because there's nothing stopping this thing. But there's support and there's support and now there's support. And even here, I'll use a big thick line. We have support right there and we have this upper trend line. Okay. Even with this market being down a little bit here, it's like there's still plenty of dips to buy or get positioned for, longer term gains. But there will be weekly noise. There will be daily noise. Do not lose sight of the forest through the trees. Does that make sense? You have to keep an eye on the big picture here, okay? Which is why I always talk about trade size. I always talk about, look, I'm way happier getting base hits after base hits after base hits with the bigger picture in mind versus going all in on one single trade hoping I'm right. It's too noisy on a daily time frame. It's too noisy on a weekly time frame, right? If you want a bigger edge, trade bigger picture. And that also rewards patience. You can't just force trades every single day planning for the big picture. Like, what did I just do in Project Options Edge? The VIX flared up to 20. Okay? When that happens, I tend to sell volatility. Now, I'm not going ham. I'm not going multiple contracts. I'm not trying to make thousands of dollars. I'm going to take an income trade worth about $500. And if we get another flare up into the 25-30 zone VIX, I'll probably take another trade that's similar and I'll get another $5 to maybe $1,000. Right? And if on one of those trades I take ownership, fine. I'll take ownership at a 35 to 40% discount and I'll work my way through the SPY and double my money. If we're taking ownership way down here, I'll double my money. Okay? But keep your eye on the big picture. Yeah. I mean, Gary, I don't disagree. It's like Trump has done what he says he's going to do. I know it's noisy. I know he, kind of handles it etiquette wise in his like brash fashion, but you got to give the guy credit for he says things and he wants to do them, and he's kind of stacking things in his favor where it's like, if I want to do this, this is how we're going to get it done. And I will give him a lot of credit for being one of the more actionable presidents we've had. It just seems like how we handle that is not necessarily diplomatic, you know. But if anything, if you're hearing what's going on in Minnesota with daycares and hearing what's going on with fraud and the high speed rail in California, I mean, we're talking hundreds of billions of dollars of waste and fraud, which exists in the government. So, like, all this stuff has to get cleaned up. I mean, when you have career politicians that are making, on paper, they should be making like $100,000 to $150,000 a year, and they're worth hundreds of millions of dollars, something is wrong. When you have PPP loans that came out during COVID and 93% of them been forgiven, and it was hundreds of billions of dollars, something is wrong. So you can get angry about that stuff, or you can participate in the markets. The markets are a way to get even. They really are. See the forest through the trees. In the big picture, the U.S. cannot afford to let this market be down and stay down. These cycles are faster. These liquidity measures are stronger. And we have so many levers to pull and so many tools right now since the great financial crisis. That is why we don't have recessions, because we're basically preventing them. Now, it's not a free market that way. It feels like it's a little bit less free and a lot more manipulated, but trade the market that we have, not the market you think we should have. This market will do a lot of things to go up. Okay. All right. So there's my PSA for the day. We will stay on the right side of market risk. Okay. I am watching some key levels here that, look, we need to exercise way more caution if we start to see this trade right here. If the market goes down to the 200-day moving average and does not immediately bounce right back up, or come down to this level and doesn't immediately V bottom from here, then we have problems. But I am giving this market plenty of wiggle room to see it. Look, what are we doing right now? We have a 50-day support level. Somebody just asked, why are we going up? Well, because we're sitting at a daily support level that might be activating some algo buying. There's plenty of support levels always built into the market, and we're hitting right at a key like daily support level right now. Now, this week, for example, when the week settles, this week could ultimately do something like this. We have a close from last week. We have a big island this week of indecision, and then we have the Fed coming next week. What does that mean? Well, the Fed, with indecision, either drives prices up or gives it back. Like, this is just price action. Okay, so we'll see. All right. Let's see here. Good on that. Good on that. Okay. Penny, I see that comment there. Hopefully everyone can see Penny's comment. Call to find out what happened. Refunded, canceled. Some folks got it. Explain why folks are not seeing the usual Telegram. Okay. Yeah. I mean, just give the team a call. Please give the team a call if you're expecting one-click trading, you're expecting your Telegram access, or it seems off. Like, just call the team and try to have them make some sense of it. All right. Good stuff. So that's for you, Brian, right? All right. Okay. Daily profit play. Still going unfilled for the day. And again, that's on me because I set levels that I want to get filled at. My initial trade this morning was offering about 85 cents. It's down to 49 cents right now, 50 cents. I didn't accept the lesser credit, even though it's a winning trade right now. My 250 spread was trading for about $2. It's down to 140. It's like I didn't settle for a lesser credit on either one, which is also why I'm sitting on the sidelines not getting filled. And that's okay. I mean, I choose to set the risk where I want it. I don't accept crappy credits. I'm comfortable with the $4 risk to make one, but I'm very stubborn about that because I think it's silly to do. Well, take the trade for 50 cents. It's like, well, if you lose and you lose 450, that sucks. It's a bigger risk. On the other trader, I tried to trade the expected move 250. I wanted some more direction. We didn't get it. So we'll see what the price action does for the day. One thing very quickly on engineered options, considering we do have some expirations today, is on this particular trade for XSP. Okay. So for the two positions, I'm down from last week. I'm up for today. If I can wash this, now, obviously the goal is, could I make a profit? We're trading at 686 right now, and I need to stay above 685. Right now, there's about a 78% chance that it does that. So if I can get price to stay above 685, I could actually carve out a net winner. Okay. So I'm going to keep a close eye on this, because this trade right here is offering me, this trade's offering me $100 a profit. This one's only risking 50. So if I can carve out a net winner on the day, I might just do that. And I'd say we kind of dodged the bullet since the market didn't cooperate, and we, survive and move on. Okay. Mike says I got filled at 325. What'd you trade there, Mike? Okay. So we'll see what happens for the remainder of the day. I'm going to keep an eye on these trades. At the very least, like, here's a good thing. I need price to stay above 685. It's $1.17 higher. Now, on the XSP, like, that's decent. If I go to the option chain, where's the 685? It's still in the expected move. This little red box in the middle, this shows the expected move on my broker platform. So there's a plus minus 283 on this one. So it's still vulnerable, right? But if price is going to stay 686, maybe move to 687 or 688, that'd be encouraging to keep that one as a winner. So I could lose here and win here and still make profit. I would consider that a nice win for last week's trades. Okay. So we will see. There's not much for me to do outside of maybe spot check this thing. I don't have to be super cute and fancy with it, but obviously if I can carve out a net profit, I'm much happier doing that versus taking a loss. Okay. We don't have to close. I mean, you don't have to close it. I don't really want to micromanage the trade, but my goal is, if enough time passes and we stay above 685, I'd like to take a net profit. So ideally, this is my max risk of $50. Okay. If this one is trading for 70 or $80 profit or $90 profit, the max profit's 100 at the end of the day. If I just want to take net profit, I'm happy taking net profit. I think that's fair. It's our final day of expiration. Why would I give back any risk? If we're showing profit, let's take the profit. Okay. We didn't get filled on those though, Jer. I've not had a single trade filled for 126. It is they're all pending. So pending, right? Sorry, pending here, pending here, pending here. They're not filled yet. So if you put the trades in with me this morning, pre-market, those have not been filled yet. Because there's time in the trade. Look what we're trading at 686, and we put in a 686. Right. Remember what we talked about last week in the masterclass? We need that participation trade to probably be like 1.5 to 2 points higher than the actual prices. So, again, I would say give it time. Like last week, we got filled on Wednesday, right? And that Wednesday trade is now in the red. We gotta trust the process. So I'll let this marinate. Yep. All right, good stuff. Okay, so on the day, VIX is retreating, which is not a bad thing. There's a VIX expiration tomorrow. That could be this little flare up and then decreasing. And I'm not going to lie, this VIX expiration stuff is so important and so real that this little flare up in the VIX and an expiration on the VIX tomorrow, you probably have a lot of those long VIX positions and long vol positions getting taken off. Okay, and I wouldn't be surprised. And, you just humor me here. I wouldn't be surprised if the market finds a way to try to fill this gap before the week is over. Okay. Which I will say does bother me that we didn't get filled on at least one of our 126 engineered option trades because price opened up around, we had lows at, let me go XSP here, lows at 83. I mean, down to 83. It's like getting us, we had an 85 or 86. Ugh, I mean, we're over $2.70 lower on that. That had to be really close. I saw this trading for like 45 cents this morning. It had to be very close to getting filled. So, but it's not done. Okay, by the way, very interesting. What is going on here? So I've got XSP showing 683, and I've got XSP in my Tasty account showing 686. What the hell? XSP 686.85. This XSP showing 683. That's weird. I mean, that's the instrument. Okay. I don't know what's going on with TradingView, but again, my broker platform shows the trade, so I'm now profitable between the two. So my defense trade is hanging in there. Not saying it's guaranteed, but it's hanging in there. If it stays above 685, then it's a $100 winner. So I'll let that. I'm just gonna let that ride. If I want to protect it, I want to be up probably like 70, 75, 80 bucks on my defense trade. And then this one max risk is 50. So if I can grab 20, 30, 40 bucks net profit out of it, I'm okay with that. Since it seems to be holding, should we bump up our contracts? No. I mean, when I have a plan, I don't typically don't go back and try to, you know, update, fix, change, modify. It's like I have a plan, I accept it for what it is for the week, and I let trades, play out. Right. Look, there's going to be a time when I'm much more aggressive. Okay. Right now, within 1% of all time highs, I'm not that aggressive. We're down 0.66% from all time highs. Okay. Now's not the time to be, sizing in. If you want to talk sizing in, let's look at probabilities when we're down to a moving average. What is happening, by the way? This feed looks like shit right now. What is going on? Oh, there's because of indecision candle. I see it. There it is. There's my live candle. So from all-time highs, we are down 1.7%. Okay. I'm just throwing out that potential caution of like, look, acknowledge what this is. If this is a rising wedge and the structure breaks, rising wedges tend to fall to where the pattern started, which is down here. Okay. Does that mean I want to be bearish to this point? No. It means I want to wait and see what happens. Okay. So on that XSP trade, I need price to stay above 685. It's now at 685. My broker platform is showing 686. This to me is really strange. Now, obviously, for me, it's like the broker platform is what ultimately matters. I need this to stay above 686. I don't know what's the deal with this TradingView feed. But if this shows above 685, that's a full profit. Nice, Mike. Okay. So keep an eye on this for today. Still have about $1.40 of wiggle room here. Hopefully it stays above 685. Looking at some intraday price action on SPX. I'd love to see. I mean, could we go down, up, down for the day and just have a chop fest? Sure. Could we, chew a little bit more into this? Sure. I don't know. I hope so. That's going to make the trade a lot easier, obviously. So I'm basing my XSP trade on my broker, which right now this is full profit if we stay at this price. So I'll keep an eye on this one. One thing I will say on XSP, like right now, I'm essentially washing the trades. Okay, there's a little bit more time that's going to be needed here, but we are kind of washing most of the risk off the trade. So if anybody went bigger than I did, where you're going, 5, 10, 20, 50, whatever, you're trading a lot bigger than I am. Washing some of that risk or getting a break even for the week is probably not a bad trade. If you want to let it go, I think that we can stay above 685. We just need a little bit more time. So I'm just going to stick with my XSP on the broker platform, which right now we have about $1.60 of wiggle room, which I'm good with. Yeah, it's weird that I've got a delayed feed on TradingView when I really shouldn't. I mean, this is a premium like Pro Plus or Premium Plus. I don't know why I'm getting a delayed feed on anything, honestly. I mean, I do pay for like the CBOE crap. All right, look, let's look elsewhere. We got prices playing around. VIX has had a little bit of a retreat. Here's your XSP delayed feed, I guess. It says delayed here. It must be by 5 to 15 minutes, which is fine. So here's live feed, 686.67. This is live right here. This is live. That's SPX. Here's live XSP. So we're at 686.64. Now, one thing that is encouraging on this one is if we can muster up the courage to get through some of these like extreme gamma and we can claw back to this positive and negative gamma pivot level, that'd be like a 690. Okay, like a 690-ish, 691 perhaps. That gives us a winner on the defense trade. Even if we took a loss last week, we still make money. Is it too late to get the engine option trades? No, the 126 trades are still available. The 130 trades are still available. They're still pending orders. So those are still fine. They're in the trade tracker. Yep. So I've got live feeds right here. We'll keep an eye on this one. Okay. And the day is not done. Not even close. So there's still plenty of trading to go. See if we have just a big transition zone. I mean, here's what I don't want to see happen. I don't want to see price drop lower for the rest of the day. That would suck. Hopefully what gets this market contained is the fact that we've had a huge drop already. And this got priced in. A lot of it was kind of yesterday. Let's actually take a look at the smaller time frame here. See if there's like a reversal pattern on the smaller time frame. And there might be. Is this? Yeah, I mean, talking about like if anyone follows like price action levels, there's a massive inefficiency right here. You could be looking at some structure where we come up to test it, maybe a little pullback. If it breaks above this, then we eat into this inefficiency. Now that could be where sellers are waiting to sell, right? But the current market structure is we could extend this little like recovery, this little squeeze, if you will, and then come into the market's inefficiency. I'd say, look, sellers are probably waiting here, right? If you are an active seller right now trying to sell these rallies, then you're looking to sell here up to like 69, 69.20, 69.40. That's where you're going to see some sell pressure. If the market kind of overshoots to the downside and we're going to fight back a little bit, we grind back to this inefficiency and then we roll over from there with real selling pressure. To use Thinkorswim, you have to learn Tasty. Thinkorswim, I mean, Thinkorswim Web is very easy to use. I mean, Tasty is very easy to use. I am broker neutral. I don't care. I just want you to be able to execute trades with low fees and commissions. Okay. All right. So far, so good. Right now, we're at 686.94 on engineered options. So looking better. So we need a little bit more time, which I'm good to see. All right, let's figure out what to do for the rest of our session. There's no going back on Greenland. Okay. How's that for a heat map? Pretty ugly, right? What we are seeing again is like this continued rotation. What I do want to see is like sector-wise, is there anything positive today? Anything positive. We only have 29% of stocks advancing. Now, keep in mind that the advance or the decline rather, a lot of the decline is already kind of taken in. So we had this open from Friday. Okay. Today's market could literally go all the way up here and we'd still have a negative percent move in the day. That makes sense? So because it was so violent to the downside, this market could climb all day and still be a loss for the day as far as the close on Friday to today's price action. So hopefully this market is more inclined to, try to fight back a little bit more and chew into that inefficiency as opposed to just immediately, sell off and see more, flare to the downside. So heat map is looking pretty ugly. Let's check some sector performance. There's futures. Here we go. Here's sectors. So everything is down. We've got XLC. This is communication services down 0.7. XLY is discretionary. That's down 1.45. XLP is staples down 0.47. XLE is up 0.63. XOP is another energy play. That's not a sector. That's just a little bit higher volatility. Energy's up today. One of the few shining stars in sector. XLE is to me a pretty solid trade. This is my SPX right there. Let's go to the higher time frame. Take a look at XLE. I mean, if you're liking some sector plays this year, I think XLE is a no-brainer. I think XLE, XLB, XLI, probably the smarter trades. Now, again, I don't love chasing these highs, so I don't intend to chase these highs. But XLE, okay, it's not glamorous, but if I did like a $40 put on XLE or a $38 put on XLE, that comes down to Liberation Day lows. I don't think we test those levels, for some pretty safe income, even for some volatility. I mean, it's like we cannot get enough energy. That's the biggest threat to 2026's upside with AI is that we run out of we strain the energy grid. We jack up all the electricity prices. That's a possibility, right? That's the constraints because we don't have enough power. We're not efficient. This is what all this stuff is being. It's like we're trying to build it now, right? But energy, I think, is a good play. So I do have some exposure on XLE. That is in Project Options Edge. XLE, we did some naked puts. The 40 and 37.50 pulled in $2.70. It's up 69% of max credit. There's more that I want to do. This one's only out to June. I'm actually going to look out to, let's go December, January if we can. If it will let me go out that far, I'm going to do the same type of thing. 40 and 37.50. See if those puts still exist. So let's go out to end of the year. 40 and 37.50. Well, that sucks. Okay, it's not bad. I thought I was going to get less credit. So I can go 40 by 37.50, two naked puts. If I took any assignment here, let me try one thing. If I went 41 by 40 and I did a 38 by 37, there's no way it's going to give me that fill. Yeah, there's no way. That would give me a dollar ratio spread to kind of pad my break even. And the same thing here for the 30 by 37. If this trade can get filled for like $2 credit, let me calculate the numbers on break evens. So I go out to the end of the year, 40 by 37 will be my naked puts. I'm assigned at 40. I'm assigned at 37 divided by 2. My break even's 38.50. Now let's say I get $2. So I take off $1 for that, and then I get another $200, take off another $1 for that. I would own 200 shares of XLE if they're assigned at 36.50. 36.50 is owning this thing below Liberation Day lows. Probability of profit is pretty high. I don't think we're coming back below those lows. Now the question is can I get filled on this thing for like $2? I'm going to try. I'm going to try $3. Well, actually go like 3. I'm going to go 15-cent increments here. I think the bid ask is a little bit wide, but I'm going to try. So let's see what we can muster up here. 315 not filling. If I can get over $2, I'll still take the trade. $3. 285. 270. 260. I need at least $2 on this trade. Okay, and it might be easier to just take two naked puts as opposed to doing a ratio spread, but I'm trying to buffer my break even a little bit better. 230. 220. Okay. Final offer at $2. If I don't get filled on the ratio spread, then I will try a naked put combo. All right, that's not filling. So cancel that. I'll try another 40 by 37.50. Now this shows 2 and change. Broker shows $1.50. I'm going to try to get filled for like 240. I don't know if this is going to fill, but we're about to find out. 240, no. 230, no. I'd love at least $2 on this trade. All right, got filled on 230. So I'm going to add this in for Project Options Edge. I'm going to go into some margin accounts now. Give me a second. Getting filled at 230. That's fine. It's a good little income play. One sector I would say I like a lot for 2026. It's also pretty non-correlated, which I'm also pretty happy with. Okay. Next up, we will go here. Okay, let me get these filled, and I'll post this in Project Options Edge. Okay, almost there. Oh, don't not fill me. Okay, 229. 229 got filled. All right. All right. So 229 is my lowest fill. 230 got filled for most of my trades. It's December 31st. It's the quarterly, end of the month, end of the year for XLE. Okay. Project Options Edge, new trade. XLE. One of my favorite sector plays for 2026. Typically, XLE is non-correlated to S&P 500. Given the insatiable demand for all things energy, this naked put combo gives me ownership of XLE below the April 2025 lows. So the trade itself, probability of profit of 83%. Yep, 11:30, Donna, correct. And we have an assignment risk of maybe about 13% chance of assignment risk. I'm willing to own shares of XLE if price is less than 40 and less than 37.50. Break-even price on ownership will be 200 shares with cost basis at So I got filled at 230. So 37.50 and 40. So 38.75 minus 1.15 is 37.60. That's why I wanted to do the ratio spread, because I wanted to buffer that and take down another dollar. But it's okay. 37.60 is fine. 37.60. Okay. Trades in, trades in. On that note, let me see. I mean, that is a decent fill. Yeah, it's okay. All right. That is 37.60. Box this in. That would be my ownership price. If price goes higher, then we just pull in profit, and it trades from 230 down to, if it's under like $30 debit or 30 cents debit, I'll just take the profit for over $200. Okay. So here, all right, trades in. Okay. Yep, it's starting to pull back a little bit. So we're at 685.64. I mean, I agree. Um, look, I can always micromanage. I'm on the hook for about $150. So this trade is up 26. This trade is down 47. It's down $50. I mean, this one's probably no chance of winning. But the defense trade has a fighting chance. I need price to stay above 685. If it can do that by the end of the day, awesome. My question is, where did we open? We opened at 686. So interestingly enough, if the market can get back above, where we opened today, if we can stay just like kind of break even for the day, then my defense will win. Okay. So if price comes down here and, bounces again and then goes back up, it's like if we have a flat day, I still have a chance to win the defense trade. Okay. Look, you're not going to hurt my feelings. If you want to take a break even on the day, take the break even, or you want to wash some of the risk. The trade to me, it's like it's small enough taking a 1 to 2 contract trade. I'm okay accepting the risk. I'm maximum risk $150. If I win the day, I'm still going to win $50. So I'm okay just accepting the fate of the day. Hopefully, like I said, we get to like break even or try to get back to this break even level, then we can win as long as we're greater than 685. To be determined. Dan, I posted in Project Options Edge. I'm not sure where you're looking for the trade, but it's in Project Options Edge. Oh, I see. You're right. Sorry. You're right. Okay. So, my bad. XLE. Sell the 40 put and sell the 37.50 put. 230 credit. Build at 230. Build at 229. This is a naked put combo. All right. Thanks for that, Dan. Okay. Updated. Okay. 12/31/26, end of the year, end of the quarter, end of the year. I really think the energy is one of the better sectors to keep going higher. I think we go higher. If you want a little bit more exposure, ExxonMobil starting to look much, much more attractive. I have some XOM in here with levels down into the 100s. It's a bit more expensive than the XLE, right? I mean, XLE is like you get your basket trade. Yes, it's heavily weighted because it's a sector, so it's weighted on some of the bigger energy plays. But if you like, if you like non-correlated, XOM is great. If we want all this energy in the world, we need XOM, we need CVX. Okay. CVX to me, getting back to this 185 zone, we're trading at 166. It's like I like this kind of one. It's a more expensive stock, but trading at like 130. Here's a couple things fundamentally on it. It's earnings. Here's a screener. So take a look at XOM. Okay, here's XOM Snowflake. Looks pretty good. Earnings forecasted to grow. Discounted cash flow shows up. It's not super expensive. 18 times earnings. It's better than 30, right? Fair value of 182. I like the upside. Go to CVX. Chevron. Snowflake looks okay. Okay. Dividend says not well covered. Okay. What are they going to do? Trim it back to 4. Insider selling. Okay. There's still room to the upside, but way below estimated value. This one's 26 times earnings. I like Exxon better because of that price to earnings. But fair market value, cash flow 326. I mean, that's a big upside. Again, do I want to buy it right now at 166? Not really. But would I take a trade where I could take a 140 or 130? Yeah, I like this trade. Okay. So again, let me see. I think I have some exposure on both. Let me double check here. So XOM, we have 100 by 95. That's worth 176. I'm going to do something similar. Let me go XOM. XOM and CVX, getting some energy exposure out there. Let me go out to December. XOM. Like I'm not interested in buying at 130. I'm interested in getting position for like the 100 area, right? Again, like I'm telling you, I'm loving these Liberation Day lows because to me it's like any big flare up, any big, where's my line in the sand? I think we've marked a significant bottom for a lot of stocks and a lot of indexes at that April 2025 low. So yes, I'm giving myself lots of room for error. ExxonMobil would have to drop 25%, which for a non-correlated energy stock would be pretty aggressive. But if I go out to the end of the year, can I get some income for like a 100 by 95 ratio spread? We're about to find out. Let's find out. So if I go December 2026, 100 by 95, or even 90, that offers me a buck 19. That offers me $1.25. That extra 7 cents is not 6 cents is not a big deal. This trade I think is fine for a quick income trade at a buck 20. If I wanted to go a little bit higher, maybe the 110 by 100. I mean, this one's not terrible. I would be willing to take some shares of it'd be 105 minus 5 minus 290. I don't shares at 97.10. That's pretty much down to the April Liberation Day lows. I like this trade. It's also a decent income trade. If it gets filled here for like 290, 280, 275, as long as it's like 250 or better, I'm happy with the trade. Let's try this one at 290, see if it fills. So XOM. 290 is not filling. I'm going to go 10-cent increments here. Maybe 250 can fill. I guess if it's over $2, I'll take the trade, but I'm going to work this down about 10 cents each. 270. 260. What was my previous fill? I got filled for 176. Okay. So if I'm over $2 on this trade, I'm pretty happy with it. 250. Not filling. 240. 230. If it's not $2 or better, I'm not going to take this trade. So we're getting closer. I'll go 5-cent increments now. 215. 210. All right, 210 got filled. All right, ready to rip. 210's getting filled. Let's go. Let's see here. The XLE is a cheaper trade as far as like ownership. I mean, owning shares of XLE is a lot cheaper than owning Exxon, but I'm putting these in for margin accounts. Do you really let these? No, because what happens if price goes higher? This $2.10. So this is trading for like I'd say under 50 cents. So if we get a 210 credit and it's trading for like 50 cents or less, I'll probably just take the profit. Grab 150, 160 bucks out of my max profit at 210. So if that happens in like June, I'll just close out the trade for a win. We'll take, 80, 85% of the max credit. So no, the plan is not to sit on these trades until December. The trade is the trade is like if price goes higher, then my credit is going to decay down to next to nothing, and I'll take as much of that profit as I can. Okay. All right. Couple more accounts. Come on, you turd. 210, 210. Cool. All right. I'll fill it 210. It's a 12/18 expiration. XOM. So another energy play. Chevron. Actually, this is ExxonMobil. Sorry. ExxonMobil. Price to earnings and discounted cash flow showing higher price targets. It's also feeding into the all-in energy need. Satisfy the AI chase without the tech hype. That's one way I said like that's how I plan on surviving the AI craze is not jumping into tech, but rather playing the physical build out. I want the scarcity build out. Give me copper, give me silver, give me energy, whether it's natural gas. Natural gas is so plentiful that it's probably not the play. But just if we have disruptions and bottlenecks in our energy grid, these energy companies are likely going to benefit. um, and it's not fun. I mean, if we have like rolling blackouts around the country because of data centers and all this other crap we're doing, it's not going to be fun. But still, I think it's a good way to also trade a non-correlated S&P. I'm willing to own shares if XOM is less than 105. My break-even price, I would do the 105 minus 5 minus would be minus 210. So 105 minus 5 minus 210 would be 97.90. Okay, probability of profit on the trades 86%. We have an assignment risk of around 15%. If you don't want the assignment risk, then manage the put. Looks like the 105 put got filled for $3. Manage it at 9 or 12 bucks to take a defined risk trade. You don't want the shares, manage the 105 naked put for a, let's say, $9 to $12 debit or a managed loss. Okay. So that project option dead stuff, we talked a lot about that in class yesterday. We had like a 90-minute session yesterday going through ratio spreads, building out some of these trades, what it takes for buying power. Um, I took a lot of these trades, but I mean, my project options ed service last year, again, it's totally discretionary, but I cannot deny, like, this is what I like to do, right? Keep your eye on the forest through the trees. 73 winners, 2 losses. We're at 97.3%. Yes, it takes some capital and cash to take these trades, but I'm always playing like a backup plan. I have the trade. I expect income. If it doesn't happen, I've got a plan B to repair the trade so I don't have to take a lot of losses. Okay. So I did a 110 by 105 there, Neil. If you just do the naked put, that's fine. You're getting a little bit more premium, maybe. Well, probably not 206. So your break even is going to be slightly higher than mine. If you sell the 105 or if you sell the 100 put, you're going to pull in about maybe 206 to 210 credit. So you sell the 100. Let's say you pull in 206. Your break even is 97.94. Okay. I have a slightly lower break even, not by much. I'm not like bragging that break even is lower. But I also have a $500 profit trap that you do not have. Okay. Your naked put profile looks like this. Right? There's your risk. So trading at 131, and then here is your 100. So 100, you pull in that $2, your break even is going to be about 98 bucks. Okay. My trade has risk, has a profit trap, then I have my trade. So I pulled in $2.10 and I have a $500 profit trap. That's the only difference. And so if price is falling, I have a bit of a buffer. If we're down to like the, let's say 115, 112, 110, this starts to give me maybe a bonus trap of $100 to $500. That's the biggest difference for me with the way I set up the ratio spread. Okay, Ben Cat says, I'm getting a credit of $12.45 for the 135 put. Well, I'm not doing a 135 put. That's for darn sure. I'm doing a 105. It's a 110 by 105. If you go 135, yeah, you're getting a big fat credit for 135. I'm not doing the 135. That's an in the money put, man. that's fine. It's just you are basically saying, like, I expect price to be going higher if you don't want the assignment. Otherwise, if price dips at all, you could get assigned that share. But the good thing is you own it. 135, you'd own the shares at like 122, which isn't bad. There's some workability there. But my goal is I don't want the assignment. I don't want the assignment at all, actually. I just want the income. Okay. All right. It's already after 11 o'clock. I didn't realize how fast the day went. But I'll leave you with this. So we just had a busy trading session this morning. Those are always enjoyable. I like just talking shop and placing trades. So, daily profit play, I was picky on my prices. I did get filled on the standard daily profit play at the 10 deltas, didn't get filled. Even the expected move didn't get filled, not yet. So I'll let those still marinate. They're still good in my book. I'm just going to wait, see if anything gets filled. Waterfall income, we'll have class here in 20 minutes. Newsbreakers, I'm going to try to look for a trade on Netflix. I know the markets are overall down right now with 70% of the stocks declining. So, I'll have to maybe look at a trade through I don't know, I might go out a couple weeks on Netflix to get rid of some of this market noise. But I think overall, like, I'd like to look at like a broken wing butterfly in Netflix. So consider this one. I'm looking for an alert on Netflix because we have earnings this week. Pinch point, we already have a bunch of pending orders. We're going to have some that are filled, still running, and we'll have some profits getting hit. We'll start looking at the scanner, see if I can find some new trades out into like May, probably April, May, June expirations. Engineered options, we might end up with a net winner today. If XSP is greater than 685, I will lose from last week's participation trade and I will win this week's defensive trade. So it would be loss win for a net profit of $50, which is not bad. Okay. Now I say that because if you traded, multiple contracts, let's say you did, whatever, you trade 5 contracts here, you're risking $250. You do 10 contracts here, you're risking $500. You still make $250. Okay. So we'll figure out where it goes. But right now we're trading at 686.70. We got a little bit of wiggle room. Hopefully it will stay above 685. And if